9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Yvonne with David Ingles.
Good morning. We're counting down to the open of markets in Greater China. Our top stories today: President Trump calls out U.S. allies for rejecting his appeal for help reopening the Strait of Hormuz, calling the decision a foolish mistake.
Asian stocks rise and oil holds on to gains ahead of the flurry of rate decisions led by the Fed, followed by the central banks of Japan, the UK, and the European Union.
Now, the region's chip makers also rising as Nvidia says it's getting ready for chip sales to China, a comeback that could be worth billions of dollars.
So you're seeing President Trump shifting the narrative a little bit here. First, it was demanding all these allies to help him with reopening the Strait of Hormuz. Now it's just saying, look, we don't need you. In the meantime, you're still talking about oil that's around $100, and now it's up to the Fed. We're still talking about Fed Day here today and what they're going to do about it.
Yeah, and that's really where markets are hoping to get clarity in terms of their path forward. The Fed, not just the Fed, right? You have a flurry of central banks and how they will, if they look through inflation or if they see softness in demand and not inflation, I think is a key point there. Because you're right? We are getting a lot more commentary coming through from the White House, not necessarily clarity on what they mean. But yes, the divisions and the tensions between it. And it's also worth pointing out, right? Prime Minister Takaichi is headed to D.C. and, of course, against that backdrop of monetary policy decisions and the frictions within the U.S. alliance.
And what we've learned is with the Chinese, I mean, it seems like the talks with President Trump have been delayed. I mean, he talked about 5 or 6 weeks from now. So that does at least move the calendar date, which could be a relief for the Chinese as well. They've been asking for a bit of extension. So that at least has been pushed back. That also does weigh on sentiment in China. But certainly there's going to be a lot. I mean, especially with the RBA, I think after they hiked rates yesterday, they're a little bit more serious about fighting inflation over there. But it might have implications for the rest, whether Iran does force the hand of a lot of these central banks now.
That's right. Even if the war ends tomorrow, it's something that they need to contend with anyway. And I think it's also playing out as far as Chinese markets go, right? So I think one of the things we've been tracking is really the steepening of the yield curve there, which also goes into why maybe some of the consumer names have been rallying. The data has been encouraging. So Chinese tech and consumer want to watch separately today as risk rally really gets going, I guess, in some ways. When you look at oil prices, and oil prices are down, you have the dollar coming back a little bit as well. So those two things are actually creating a decent foundation upon which risk assets are jumping. So just in terms of central bank decisions, you have the Fed, you have the ECB. Coming through. But first on deck, have a look at currencies, is the Bank of Canada later tonight, Asia time. Then we go into early morning of Thursday, that gets into the Fed. Brazil, at some point, the BOJ. A few hours after that, you have the Bank of England and, of course, the ECB. So a flurry of central bank decisions. It's also worth pointing out that most are probably not going to do anything, but it's really what they say and how they say it, as my ex would like to tell me, said all the time, is really what matters sometimes. Anyway, it's a choice of words, as they say. The 10s on your screens, we're looking at a rally across Asian government bonds, tracking what we had on Wall Street overnight, so yields are on the way down. Very quickly, equity markets are doing this. Kospi's up 4%, leading the gains here across these markets. S&P futures, 10th of 1%, and we are getting Taiwan coming in line, 1.4%. And within China, of course, speaking of tech, the big one is coming out with earnings today, Tencent, more on that in a moment. But yes, we are looking at some modest upside. We're sideways across most Chinese assets as we speak.
And President Trump, as we mentioned here, has lashed out at allies who rejected his appeals for military assistance in the war with Iran. He singled out Japan, Australia, South Korea in a post on Truth Social, even while saying the U.S. doesn't need anyone's help. Trump also stepping up his criticism of NATO, too.
So I think NATO's making a very foolish mistake. And I've long said that, I wonder whether or not NATO would ever be there for us. So this was a great test, because we don't need them, but they should have been there. The other thing is, and I think, very important, we didn't have to be there for Ukraine.
So certainly that does leave a lot of questions about what comes next here, really kind of ditching his efforts to recruit a lot of the partners in this war and really unblocking the Strait of Hormuz. For more details, let's bring in our team, our politics editor, Laura Davison, and our chief Malaysia correspondent, Stephen Ingles, who's tracking, of course, U.S. and China trade talks. Laura, I'll start with you. So, at first was like, almost like you must help us out to the message to allies. Now it says we don't need you. What comes next now, Laura?
Really unclear. Trump is, feeling very irritable and frankly kind of hurt over this. He didn't get the response he wanted from allies, and so instead has just sort of reversed his position here. He has not been able to drum up support from NATO allies, from Asian allies, from really anywhere around the globe for this war. Really, the only partner who's come forward and said that they'll send sort of a modicum of support has been Ukraine, notably, some of the drone warfare that Zelensky has been able to use in the war against Russia there. But this is, puts Trump in a really tough spot. He's also put some deadlines on this war. That Kevin Hassett, the White House economic director, says that this war will last 4 to 6 weeks more, and after that it will start to hit U.S. consumers. Trump has also put that 5 to 6 week deadline on a Trump-Xi summit getting rescheduled. This is an important moment here because if, the war is not resolved, if things are still in a bad place come early May, this puts a lot of pressure on Trump, both globally as well as domestically, to sort of announce and put forward some sort of solution on what the path forward is.
Yeah, and if we use, Laura, just to borrow what you just said there, if we use that time frame on the end of the war as perhaps the benchmark for when that trip to Beijing might be able to take place, and Steve will bring you in on this point here, what more do we know beyond the around 5 or 6 weeks, and it pertains to the timeline there for the summit?
Yeah, that's the only guideline we have right now is 5 to 6 weeks. And if Kevin Hassett is saying 4 to 6 weeks for the end of the war in Iran, so you can basically peg that the trip to China could possibly happen whenever the Trump administration determines that hostilities have subsided in Tehran. Keep in mind, China, the back channel communications essentially, and from sources telling Bloomberg that Beijing doesn't want to have anything to do necessarily with or even giving any kind of modicum of support by welcoming Donald Trump to Beijing at this time to give the impression that possibly Beijing is supporting whatever the Trump administration is doing, whether it's an excursion into Iran or outright war. They don't want necessarily, according to the sources, have to be connected in that way. So a delay right now, while Donald Trump has sort of backtracked from some of his comments he made over the weekend where he said, I might delay this trip to China, which, by the way, is going to plan to happen in 2 weeks' time from now. Yeah. I might back away from that if China doesn't come to our help securing the waterways in the Strait of Hormuz. Now, the Trump administration has backed away from that connection, essentially saying that's a false narrative. That's Scott Bessent, the Treasury Secretary, saying that. Jamieson Greer, the U.S. Trade Representative, doubling down on that sentiment as well, saying the delay has no relation to the trade and economic talks at all. And again, essentially saying that this was, and Scott Bessent reaffirming that this was because of Trump has his hands full with the war, and it's a logistical problem right now. But again, I would say Beijing has been very quiet on this matter. The spokesperson at the daily briefing at the Ministry of Foreign Affairs in Beijing yesterday pretty much said very little other than that they've been in contact with the United States on this matter.
Yeah, there's a great BN story that this is something that Trump does, right? Delays and pushes these foreign visits as a form of leverage. But leverage is certainly the key word here. Does this potentially in some way derail the progress when it comes to trade talks?
I guess who do you ask? We'll have a different answer to that. Jamieson Greer is saying absolutely not, as I just read out his quote. They basically, their narrative coming out of those talks with He Lifeng over the weekend in Paris is that they are discussing, and it's something the Vice Commerce Minister of China also confirmed, that they're working on some sort of new framework to not formalize, but maybe have a different way of categorizing bilateral trade and other issues that might crop up between China and the United States to make it a little bit more permanent, that truce that we got in December. Does that derail, maybe that's a stronger word than we can use right now. Maybe it simply takes a little bit of the steam out of the progress that was made in Paris, and it pushes that the proverbial can, further down the road. And it definitely puts into question whether those two leaders, Xi Jinping and Donald Trump, will be able to meet that goal, if you will, sort of an unofficial goal of having 4 meetings at various places over this year.
Yeah. I mean, it's certainly not a net positive, and certainly confuses a lot more people on really what's going on. Laura, let me just end with you here. There is some certainty, though, over this visit. The Japanese are headed to D.C. Is that going to be straightforward, or might that also be somewhat awkward?
There is certainly a lot of awkwardness to go around here. Takeichi had this visit set up well before the war in Iran started, and sort of the agenda items that she wanted to bring to the table, in terms of security, defense, semiconductors, trade, all of that will be overshadowed by the war and all the moving pieces there. Compounding that, she's meeting Trump when he's in not a particularly good mood. He's been rebuffed by allies all week. He has sort of struggled with this war on the messaging, both and on the strategy as well. So this could be one of those Oval Office moments where he's sitting there next to Takeichi. The press is crammed into the room, and things could potentially go off the rails. This is, kind of a really a live wire moment for Takeichi to keep these relations good.
Yeah, certainly she has a warm relationship with the president. We'll see how she approaches all this as well. Laura, thank you. Our politics editor, Laura Davison, joining us from Tokyo there, and also Stephen Engel, our chief North Asia correspondent. In terms of your agenda here today, yes, we talked about that update when it comes to that Trump-Xi summit, so that's been pushed back by a few weeks as well. That steeper CGB curve certainly is one thing to watch. This came on the back of that data dump that was better than expected just a few days ago. So certainly we can even follow that steepening sort of trade. There is going to be a CGB sale here today. Sectors that we got to watch out for still is going to be the oil plays, still going to be the metals plays as well. Tencent earnings, there's a great piece about, how they may be leading or finally catching up in this whole AI race when it comes to agentic AI. So AI will be front and center for these earnings there, but also Tencent Music, ZTO, Prudential reporting here today. We end the day with some jobless numbers coming out of Hong Kong.
Yep, red taxi on the ding rails there for you. Tencent set for its biggest outperformance relative to Alibaba, of course, monthly there, going back a couple of months. It's been quiet, right, on AI, but suddenly we're here talking about this. Earnings on deck, as you can see on your screens. So, yeah, we have lots more coming up, including a preview, of course, of Tencent results coming through in a moment here.
Yep, and as it shoots for a 5th straight quarter of double-digit revenue growth, of course, with those agentic AI ambitions in focus. We're also counting down the open of trade in Shanghai, Shenzhen, and Hong Kong. This is The China Show.
Right. Welcome back. We are seeing a rally, 3rd straight day, as you can see on your screens, after the initial drop early this month. When the war started, equities have somewhat found some stability, and we're now pushing towards the higher end of this very tight range of late, and a lot of that has to do with the rally today. We're seeing across the Kospi index. You have Samsung within that. Taiwan, of course, is also punching quite strongly to the upside, as is the Nikkei 225. So the question is, once we get up into the upper end of this range, what does the dollar then do, right? The dollar then becomes your rat poison if that goes to the upside. We're doing well, and A50 futures going into the session today. We're looking at Tencent, CGBs in focus, steepening of the curve. We just got the fix of the day, bottom of your screens. So it seems like a day of Asia ex-China, but we'll see. It's early. We'll see, what happens here.
Yeah, it just seems like markets are trying to look past this whole Iran situation for now, given that there hasn't been that much in terms of change there. Maybe it's good to look back more at earnings, which certainly is a bit more on the fundamentals. And Tencent certainly is going to be front and center in just a few hours. Expected to record its 5th straight quarter of double-digit revenue growth when it reports later on today. In fact, thanks to its core gaming and advertising businesses. But investors will also be focused on its ambitions when it comes to agentic AI. Let's bring in Min Lo, our China correspondent, on what to expect this time around.
Yeah, I think we will be looking out for management commentary about how much it will raise its AI spending, because so far Tencent has been quite prudent. It hasn't matched the sort of huge capex spending, the likes of like what Alibaba has announced. And of course, recently it's been OpenClaw that's been all the rage, right? And Tencent has been one of those that rolled out its integrated service called QClaw. If you look at Tencent's performance the past year or so, it's actually been lagging behind Alibaba because it's seen as being slower in rolling out its AI apps, is seen as slower in acquiring new users, particularly if you look at its ChatGPT-like app, which is called Yuanbao. You compare that with Alibaba's Quen or Doubao, which is ByteDance's app. Yuanbao has the smallest user base, but that all changed in March. You look at the stock performance, it started to catch up in March with Alibaba, and it seems like investors are really betting that Tencent could be best positioned to capture this AI agent market because of the existing ecosystem it has. With WeChat, it's a super app with many mini apps on it that gives it a treasure trove of data, many opportunities to monetize, and of course the company is also very close to rolling out its own agentic AI service, some say as soon as next month, and eventually, you know, they are best placed to make WeChat that one-stop AI assistant service.
Yeah, they do have that customer base, of course, which is quite unique to them. Might the concerns over AI push not translating immediately in terms of revenues, and might that push down margins? Might that be a concern?
Yeah, that is a major concern. I think the good thing about Tencent is that right now its core revenue from gaming and advertising is still very robust. That sets it apart from the likes of Baidu, which is really taking a hit on its core revenue. So that provides a little bit of cushion. But at the same time, this demand for agentic AI, the sheer computing power required is going to be a major drag on its margins because API pricing has been very low over the last couple of years. There's been a price war. The good thing for Tencent is that starting in March, they raised their API pricing by 460%. So maybe that might quell a bit of those concerns around the sustainability of its model.
Min, thank you. Min Lo, our China correspondent there. In the meantime, Nvidia, big news there, of course, overnight, is firing up production of its H200 AI accelerators for the Chinese market. The CEO says, Jen-Hsun Huang, of course, there says that the company has secured licenses for many customers and is restarting production for a market once blocked by U.S. export restrictions. Our colleague Ed Ludlow reports from the chipmakers' annual conference in San Jose.
The situation for Nvidia has changed in China, literally in the last 3 weeks. It seems like now there are multiple licenses for customers in China, and Nvidia is taking steps to meet that demand. Here's what Jen-Hsun Huang had to say.
We've been licensed for many customers in China for H200. We have received purchase orders from many customers, and we're in the process of restarting our manufacturing.
The biggest piece of clarity came around that $1 trillion figure, a sales opportunity 2025 to 2027. It is just Blackwell and Rubin-based systems. It does not take into account any revenues or revenue opportunities from CPU or even Grok, although Jen-Hsun Huang did say that if you factored Grok into it, there could be up to 25% upside on that $1 trillion figure. Beyond that, it was very much a kind of state of the world. It always is at GTC, where Jen-Hsun Huang holds court with the press and goes through a wide range of issues. But probably the biggest thing beyond sort of talking about how robust demand is the solidity of supply chains. There's going to need to be trillions of dollars worth of capacity put in place to meet the supply that's required for current demand. Jen-Hsun Huang also addressed what's happening both in the Middle East and in Iran. Nvidia has lots of employees in Israel, and he said that the company is committed to Israel. He's very worried about his employees there. And as it relates to Taiwan and the future of Taiwan, Nvidia is 100% committed, and its supply chain has heavy concentration there. That is not going to change. Ed Ludlow for Bloomberg News in San Jose, California.
Just immediately some breaking news now. Mitsui OSK, listed in Japan, of course, massive pop in the stock. Reuters reporting that Elliott has taken or takes a significant stake in the company. The company itself has just also come out a few seconds ago with a comment that they won't comment on individual investor shares are rising substantially right now in Tokyo.
Yeah, so we'll get a bit more clarity there, but the company has spoken now saying, yeah, they won't comment on this right now. Another mover that we're tracking is Tencent Music. So earnings came out here. We did see the ADRs actually fall quite a bit here during the U.S. session after we did see the company report a bigger than expected drop in monthly active users. So slowing growth in subscription revenues, really despite that stronger performance in other sales as well as the stock down some 15%. We got plenty more ahead. This is Bloomberg.
I like the juxtaposition of A50 futures, Hang Seng, and the weather across both are fairly similar in as far as we'll show you that graphic in a moment. Very proportionate in terms of the dim switch. Anyway, 0.2% to the upside. A50 futures are flat going into the open here today.
Yeah, in terms of what we're watching out for, you're still seeing some substantial gains across Asia benchmarks here today. So there's an earnings kind of flavor to all this here today. Take a look at Tencent Music. We talked about that. JP Morgan also has cut the stock to neutral here with a price target of $48. So that's kind of where we are right now with the stock itself. ZTO Express, they also came out with earnings, and I believe there is a bit of a dividend that they've announced as well. So certainly that's one thing to watch. New share buyback, I apologize, I correct myself. King D also, net income missing estimates here, but the stock is doing quite well. And we're watching the likes of Tencent. That's the next one to watch. So the boards and see, you have Tencent, you have Geely, you have Costco Shipping, all reporting later on here today. China chips, we talked about that, just given the focus with Nvidia ramping up their H200 sales there in China. So you are seeing at least some of the chip space doing okay. CATL H shares also, Morgan Stanley raising the price target for the company. This is on the back of really the ride it has been on since its earnings came out. But they talked about when it comes to the net cash position, it's better than expected there in those 2025 results. That's why they have raised their price target by around 8%.
Yeah. Okay, in terms of data points, not a lot today. Well, we have one, of course, here in Hong Kong, which is the unemployment rate that's coming out later today. Apart from that, it's really all about central banks. We are going to be on watch from now, of course. Canada kicks things off later tonight, Asia time. I talked about this graphic. I'm not sure if that's a function of just 30 windows in Shanghai. Interesting there, in a view from IFC in Shanghai and a view of IFC here in Hong Kong. Inward looking and looking into some reflective thoughts going into the Wednesday session. Flat on A50, Hang Seng is up 0.2%. The opening bell is coming up next. Good morning and welcome back. You're watching the China Show. Just counting down to the opened up markets here in Greater China. So we are looking at a rally across the region led by Japan, Korea, and Taiwan. So that's just basically also saying tech is also seeing a bounce today. Tencent is due out with earnings, so we'll see whether or not the markets do find further solace in some of the numbers coming through. That reports, of course, after the close today. Apart from that, though, 0.2% to the upside. Tencent Music is one we're tracking, of course, going into today following that quite a steep drop there.
Bad set of earnings on that front. And as we count down to the Fed, I think that's going to be the next focus for investors here today on how they're going to respond, or at least what's the messaging going to be about this spike in oil prices and what they're going to do about it, or they're just going to look through it. Certainly, that's going to be the big question here for investors. And right now, it seems like markets are trading higher here as we count down to that big Fed decision as well, and really kind of moving on in some ways from the latest Iran headlines. And you take a look at how it is. CSI 300 is up about 1/3. Shanghai crude is still a little bit elevated here. We're up about 1.5% for futures there for crude. And we're focusing very closely on, what happens in this whole A share, H share. Goldman just coming out with an interesting report. Yeah. They have lifted their 2025 earnings growth forecast for China A shares to 10%. Albeit, though, they're lowering the outlook for this year to 13% for both A shares and MSCI China. on the account of higher oil prices. So that certainly is one thing that they're factoring in here right now. But they still think that A shares will outpace Hong Kong when it comes to earnings growth. So that certainly is one upside, I guess, potentially for the A-share market. You take a look when it comes to some of these big large cap tech or just large caps, I should say, not doing a whole lot here this morning. There's not a whole lot of conviction, to say at least. Volumes have been actually quite low, despite the rallies that we've seen in Asia yesterday as well. You take a look when it comes to the Hong Kong side of things. When David contemplates what happens with Windows and the like, you know, it seems a bit clear, at least today in Hong Kong. Albeit we're not seeing, massive gains like the rest of, Korea and Taiwan and Japan here this morning. But you are seeing when it comes to Tencent, that's the big one to watch. The shares are slightly lower leading up to those earnings, despite the fact that we're going to get some decent ones. A lot of focus on AI and agentic AI. They've launched a few products. That certainly is going to be the key focus here, whether they can catch up in this whole AI race with Alibaba. The stock certainly has reflected that, given that it has outperformed Alibaba of late. But Alibaba is also down about 0.4% here today. You take a look when it comes to the property sector is catching a bid here. You're watching also the banks like HSBC also seeing gains of 1%. So some of these old traditional sectors are doing quite well. Offshore renminbi is still slightly on the stronger side. We're 688 levels here this morning, but we're pretty flat when it comes to HS Tech overall. We talked about the China chips angle, just given the fact that Nvidia at this big conference did announce that they are ramping up the H200 for sales to China. So does that impact at least some of these Chinese chip makers? Looks like overall it is to the positive right now. Hua Hong Semi is up some 1.3%. We talked about earnings. Prudential, ZTO, Tencent Music, and King D have reported among those. ZTO with a big buyback program. Prudential also talked about new business value was actually gaining there. So they also added to their buyback. But right now we're watching very closely Tencent Music. Look at that. 22% drop there. When it came to just subscription sales, that did disappoint. Some are also talking about the mounting sort of cost when it comes to AI adoption as well. That could actually continue to weigh on the company in some ways. Watching CATL shares. Okay, so interesting note from the likes of Morgan Stanley. So they've just been kind of focusing on overall the earnings that we got for 2025. And they're saying, look, net cash positive, everything looks pretty good right now, better than expected. So they upgraded A and H shares. But CATL is lower here today in the A share market. Okay. Yeah, what is Hong Kong Robotics? Anyway, okay. I chose to skip it. Yeah, okay. That's us being pensive. Okay, lots to talk about today. Well, okay, we'll get to the breaking lines coming through out of Elliott management on OSK in a moment. Interesting is that we are going into a flurry of central bank decisions where, if you think about it, the best case, well, the real possibility really is they're not going to do anything, right? And the markets are building up this wall of worry for nothing. Or they could choose to see inflation and not a softening of demand through the inflation story. And that then becomes a problem. We know, of course, this dollar story. If I could ask my producers to bring up the correlation chart between equities and the U.S. dollar, and that negative correlation has, in fact, been deepening of late. So once this dollar does come, if it does come back, it's going to be a problem for this rally. Mark Cranfield is with us to give us more context here on how we should be looking at the Feds. And Mark, thank you for joining us, the Fed and friends, because you have a whole flurry of central bank decisions into Europe Thursday evening Asia time. Mark.
Indeed. I think people will be looking for the inflation angle across the board here. It's the Fed is probably very important from that point of view, but the European Central Bank also will carry a lot of weight when they come in tomorrow, as indeed with the Bank of Japan, but for slightly different reasons. But what we'll be looking for from Jerome Powell now, apart from all the public data that there is, he will have some of his own readings. And if you look, there's a very good report from Bloomberg Intelligence, which came out overnight with their nowcast models. And what they're showing is that inflation readings are already going up. And Jerome Powell and his friends will be aware of exactly that kind of thing. And traders will be looking for them, how they interpret that, and whether or not they will dare to take the risk that they did back in a couple of years ago when they talked about inflation being transitory. Now we know how much trouble that got them into. They delayed interest rate hikes for too long when inflation was picking up, and eventually they had to do serious catch-up plays and raise interest rates probably a lot further than they really wanted to. And there was a massive flattening of Treasury yield curves and the consequence effects for assets across the board. Now, it's very early stages, running into the third week of the war in Iran, but clearly with oil prices as high as they are, they've got to start taking this into account. So what investors will be looking for is how seriously they're willing to act about those inflation numbers. Traders are already pricing out interest rate cuts for this year, pretty much gone across the board now as far as the FOMC is concerned, and for most central banks around the world. Australia has already started to hike, so that gives you a clue of what people around the world are thinking about this in the G10 space. Now, whether Jerome Powell gives that clearly or whether he hints about it, anything he has to say about the outlook for inflation is where the bond market especially will be jumping on that. And clearly the risks are skewed towards generally yields rising today, but probably more significantly is a kind of a flattening twist in the curve. That's what people have been looking for very carefully today.
And equity markets, Mark, seem to be shrugging it off right now. We've actually seen a pretty decent positive start to the week, especially here in Hong Kong. You've been writing about Tencent earnings, though. That might be the dampener. Why?
It just doesn't have a good track record of performing well around earnings time. I mean, even though they quite often come out with decent numbers, somehow the market seems to price so much in advance that of the past 6 quarterly earnings, 5 times the stock has fallen in reaction to that. So it seems to do its work ahead of that. There's also this other bigger concern. You talk about the agentic AI situation, and there's just people getting very concerned that there's cannibalization going on, particularly with the Chinese tech firms. They're just fighting one another over all these products in the space, which is reducing potential profits for these companies. They're so keen to grab the latest device to get more market share. All it's doing is huge investments, but the returns don't match with the money flowing into the market. And investors can see this, so they're taking a more conservative approach to those kind of companies. A bit of a contrast to what you're seeing in the United States, where there seems to be a smaller group of companies dominating that field, and they're still able to extract some money out of it. So for the time being, we probably need to see some consolidation in the Chinese space before investors are happy with what they see, this fight over AI. The flip side, of course, is what you're seeing in Korea, is you've got the Kospi absolutely going through the roof because the people that are producing the chips that drive this are still so much in demand that those companies, Samsung's, SK Hynix, they're rebounding very, very quickly. So you're getting this massive divergence between people that want to stay with the winners and they want to avoid the losers. And it's something we've seen before across global markets where if you're winning, great. If you're losing, you're going to stay losing.
Mark, thank you. Mark Cranfield there, our MLI strategist, joining us out of Singapore. As Mark was speaking, there was a line that dropped on your terminal here. This is more reporting from Reuters this morning, talking about how Chinese authorities have approved Nvidia's H200 AI chip sales. And this comes on the back of what we heard from Jen-Hsun Huang just a few hours ago in the U.S. during this big conference of theirs, saying they already are firing up manufacturing of those H200 accelerators for customers in China. So it seems like, according to Reuters, China has been given approval of this as well. So yes, the stars might be aligning finally for Nvidia in China, Dave.
Yeah, certainly some momentum going into the summit in 2 weeks. Oh, wait, there's the situation, of course, in the Middle East, and we now know that that summit might get pushed back even further, really on the back of this was supposed to be actually one of the talking points across, if you dial it back 6 months ago, tech access to both markets between the U.S. and China. But of course, there are other things happening in the world right now. You have oil prices and the dollar on the way up, generally speaking. How is that affecting the Chinese market specifically? And beyond that, what are the opportunities that this market presents? Joining us here on set, Raymond Jing, Equity Portfolio Manager at ChinaAMC Hong Kong. Raymond, good morning. Very nice to see you.
Good morning.
What have you observed to be the biggest impact on Chinese markets given the events in the Middle East?
In the past week, we saw that Chinese market actually have held up better than Asian peers, especially during the global sell-off caused by the war in Iran. We believe that the investors generally, they see or they view China as a safe haven in some ways. One most important thing is China's energy mix is quite diversified, not rely only on the oil and and gas.
Okay.
And mainly driven by the coal and renewables. And the most important thing is that the support by the Chinese government. We saw during the past crisis of volatility, actually Chinese government step in the market and trying to set a floor for the market sentiment. We think that is important. Yeah.
You also mentioned when it comes to the AI value chain as a whole in China, you've been very constructive around that theme. Yeah. How do you position around the whole AI theme in China now?
Actually, in ChinaAMC, we are very constructive on AI, and we invest in the whole supply chains within the AI, value chain, from the infrastructure to application layer to the parts. So actually, we just launched the AI ETF, focusing on the leading companies both listed in Hong Kong market and the U.S. market. Actually, this product is well positioned for the growing demand of the investors, their exposure, especially the thematic exposure on the AI, especially in these two very different and very dynamic ecosystems in China and the U.S. So actually, I think we're well positioned in the, investing through the active fund, but also on the ETF side.
Yeah, so interesting. It's rare you get, at least for now, it's rare you get a bet on both horses, right? It's either you get the U.S. or the Chinese side, which are dual track. Suffice to say, you guys are bullish on both, and what could be the risk to being bullish on both?
Yeah, we all know that China GPU chips, actually their capability is a little bit limited. So actually China needs to seek a different path versus US, right? And China actually is very strong in advanced manufacturing. So actually Chinese government, they want to combine their ability of manufacturing with the AI development. So actually we think China markets have, for example, in humanoid robotics, actually Chinese companies account for more than half of the top 10 robotic names in the world now. So that is a very good example to show that China market in AI is quite different from the past of the US, but these two markets also have a lot of value. We need to seek alpha from them.
Who comes out as the front runners then of this whole AI race? We talk about, is it Alibaba? Now we're talking about Tencent that could be leading the chart in agentic AI. And then you have some of these startups that maybe don't have the same sort of in terms of data or the deep pockets like these internet tech giants. How do you kind of filter through the winners and losers now?
Well, in terms of the winners or losers, I think it is not either or question. Okay, in China we have the very big population, and we have a lot of population there. They can adapt those new cutting edge apps very quick, very soon. So that provide these tech giants the opportunity to grab such kind of good opportunities in the AI era. So probably some tech giants like Tencent, they are did very good in the application layer. So actually we see now that actually a lot of the participants in AI era in China now, not only on this hardware side, but also on the application side and the software side. So actually, we will see a lot of opportunities. So now it is still too early in the booming industries. AI actually is not a pure theme right now. It already changed the world, changed industries, changed the economies on a global scale. So actually, what we are doing now is trying to follow the trend of the AI, follow the development, a very fast development in the AI. Yeah.
Outside of AI, does anything else excite you when it comes to China?
We saw that during the past 2 weeks, the work report from the meeting, right? We find something very important points. The first of all is that the higher focus on the promoting the moderate inflation and will address what we call the evolutionary behaviors to improve the margin. I think that is very important, right? If you control the supply and the gradually expanding of the demand will drive the improvement of the margin and the profitability of the listed companies. Another thing should be AI. Okay, back to AI. AI was a huge focus on the work report. So actually, AI plus manufacturing, I think that is a a very huge potential in China for us to explore. Yeah.
There's a narrative that if China continues to double down on its efforts in AI, in innovation and manufacturing and in the high-end side of things, that consumption will falter. Efforts to boost consumption are kind of pushed in the wayside. Do you see it that way? Because we have seen some consumption plays actually doing quite well of late.
Yeah. Actually, if you look at I mentioned that inflation, right? If the PPI could get back to the positive level as early as March, as this month, actually we will see
PPI,
okay. Right? And the CPI now is around like 1%, right? So actually, we will, go to a better narratives from the deflation rates less than like 2 years ago or 1 year ago. So actually, when we get to a moderate inflation stage of phase, actually, more consumption name will benefit from such kind of the recovery. I think that is very important for us. Yeah.
Raymond, it's great to have you here in the studio. Raymond Jing, there,
Yvonne.
Equity Portfolio Manager at ChinaAMC Hong Kong. We got plenty more to come. This is Bloomberg. Well, you may have missed or looked into this more yesterday, late afternoon. The sources telling us that Beijing is restricting Chinese companies incorporated overseas from seeking IPOs in Hong Kong. Now, these so-called red chip firms are registered outside China but hold assets and businesses within it.
Now, Bloomberg Intelligence thinks that the new limits could slow the listing pipeline here in Hong Kong. Let's bring in Charnie Wong, our senior analyst, with us here to talk us through, of course, is this clampdown, is it a major roadblock now for Hong Kong listing specifically?
Yes, I think, in the first 2 months, when we look at overall red chips as a percentage of total IPO proceeds, it's only 7%.
Right.
So I don't think the immediate impact is going to be very significant. And then also it sounds like that the clampdown, it's quite targeted. So they're not, banning all red chips, just those, that don't really have a good reason for incorporating overseas. So I think overall the impact would be less than that.
What does it mean for the pipeline? What's the outlook now?
Yes, so far this year, it's been really strong. 28 companies raising about 12 billion, and despite that, only 7% of red chips, as I mentioned. And actually, for this year, we're still anticipating total IPO proceeds to be about 40 billion. And I think, the pipeline looks really strong. The Hong Kong Exchange has said there's nearly 500 in the pipeline, and then actually a bit over 200 have applied to the CSRC already. So these are Chinese companies looking to list in Hong Kong. So we actually think that will continue despite these risks.
So what are the other things that could derail the momentum? So red chips, perhaps not a big part. There's also obviously the incentive there to simply incorporate in China, right, that allows you to come in here. So what risks are you watching then apart from this?
Yes, so the pipeline has just grown a bit too fast, right? So at the end of last year, it was around 300. Now it's 500. So I think now it's more capacity constraint of the investment bankers, right? And then we've seen the insider trading probe at some of the brokerages. The brokers. So regulatory scrutiny, that's one. Regulations. And also on the due diligence standards overall. So I think that the capacity constraint, that's probably going to be key. And then we're potentially going to see a slower conversion of these applications to listings. And then in addition, the SFC, they've already said that they're really worried about the poor quality of the listing documents. So, I think just overall, if they have capacity, then great. But otherwise, I think that's the biggest risk.
Charnie, thank you. Charnie Wong there, our Bloomberg Intelligence senior analyst, of course, on this Bloomberg Scoop. Of course, you can get more on the Insider's Guide to the Money and People Shaking Up the Finance Hub in our Hong Kong edition newsletter. That's out every Thursday. You can sign up through our QR code. Just scan that right on your screen there. Or go to the website, bloomberg.com/newsletters. In some other corporate news this morning, senior bankers at China's state-backed financial firms are said to be facing major bonus cuts. Sources have told Bloomberg some senior managers and division chiefs have seen their 2025 bonuses slashed by at least 30%. The current wave of cuts follow a years-long push by President Xi to promote common prosperity and crack down on what officials describe as the hedonistic lifestyles of elite bankers. Bentley says it's cutting 275 jobs as it grapples with falling sales in China, tepid EV demand, and U.S. tariffs. The British luxury car maker says reductions affecting roughly 6% of its workforce will impact office roles rather than manufacturing. Bentley CEO says the measure aims to ensure the business remains competitive.
Yeah, and remaining competitive is certainly the re-emergent theme when you look at memory, and so far investors have not forgotten the memory shortage out there in the world. Chinese names are tracking regional peers to the upside and quite substantially, as you can see here on your screens. Another update too, just very quickly, shipping, Mitsui OSK, Elliott has taken a stake in the Japanese shipper. Shares are up 10.7% in the Tokyo session with about 35 minutes left before we go into the Tokyo lunch break.
And coming up, we're a look ahead to the Fed as policymakers weigh a range of fresh risks to the economy from the Iran war. Ahead, of course, that rate call. LGT joins us next. This is Bloomberg. All right, we start with some breaking news here when it comes to data center company here, DayOne. Now, they're seeking to double the size of an existing loan now to as much as $7 billion in order to expand their operations in Malaysia. This is, of course, a Singapore-based company here, and just really adds to how the whole kind of debt markets and what we're seeing in terms of funding has really been focused on one thing, which is still AI, Dave.
Yeah, don't worry about the cracks in the private credit story is my positive spin there. But yeah, I mean, they have managed to, of course, get that loan through. And of course, the runway for this is quite long as well, right? So we'll get the details, of course, of this really good Bloomberg scoop in a moment for you once we get more information on this from, of course, the news desk in our newsroom here. Okay, we're going into the 31st minute of the cash market session. Session lows in Hong Kong, although check out the weather, though. 0.4% to the downside on the Hang Seng China Index. Tencent is set to report today. One of the big stocks we've been tracking since the open is Tencent Music. Last we checked, down 20%. Downgrades coming through out of the street. The stock, worth pointing out, has done well this week, although when you look at the stock itself, over the course of 1 year, flip the page, please, we are at about the lowest in about 11 months or so. We are seeing a rally, though, across the region. Japan is 2% to the upside, just coming off highs ever so slightly in Korea. And in Japan, Taiwan has been at 1.5% there. A lot of that might have to do with the fact that oil isn't rallying substantially today. As with the dollar, I should also put those two things together, too. Oil on your screen, still above 100, although we are getting this color of red, which is welcome, of course, when you look at risk assets today. Bond markets, your 10s on your screens. We're moving up against this window of major central bank decisions, everything from the Fed, which is Wednesday, of course, in the U.S., Thursday here in the Asia-Pacific, BOJ this time tomorrow. Canada is tonight, Asia time, and then tomorrow evening gets us into Europe, where you have Super Thursday, Bank of England, and of course the ECB there.
Yeah, it's interesting, right? I think Mark Cranfield mentioned when it comes to the ECB, I think they don't want to repeat the mistakes that they did during the 2022 Russian invasion of Ukraine, and which mostly they thought was going to be transitory, and they saw through that sort of inflation impact. So maybe when it comes to some of these other central banks, I think the Fed, when you look at pricing and you look how people are looking at this, it might be more about the guidance than really what they might do, because I think right now most people are still pricing in one cut for this year. So certainly, it's really going to be what Jay Powell is going to say, and really how he's going to telegraph the potential shock from oil prices here. Yeah,
hopefully, to your point, right? Lesson learned from the wobble from the transitory issues back then, and whether or not right now is one of those phases, hopefully, that they will look through the current the current situation. But when you look at, I think, break-evens have moved to the upside. We are back at one, as Yvonne is pointing out, one full rate cut before the end of this year. What it means really for the U.S. dollar, I think we have a chart that should be coming up as well here. Can we get that up, please? In terms of the relationship, this comeback of the dollar has really sapped the momentum out of equity markets. And as you can see now, we're now at the most negative correlated situation, U.S. dollar against U.S. equity specifically, if he had to go back. So it has really been a pain trade, this comeback of the U.S. dollar here.
Yeah. Okay. Let's bring in Trang there, FX and rate strategist at LGT. She joins us here in Hong Kong. When you take a look at the dollar, I think trade-weighted wise, it's strengthened about 2% since this war began. Do you think this sort of strength can last?
Good morning. So I think for now it is during the duration of the crisis. We have turned, I guess, tactically neutral on the dollar from bearish previously. And when we look to the stages of, the FX market reaction, in fact, it has been incredibly rational. At first, you get some depositionings, and then you see very tight FX performance correlations with terms of trade. And in both stages, the dollar is in favor, right, because of the petro status and also because of short positioning. But I think if we take a step back and look a bit on a medium to long-term story, what does it mean for the dollar reserve status? And here I think it's a bit more uncertain because on one hand, one can argue that, the military actions year to date in Venezuela and Iran, it kind of demonstrates dollar supremacy, U.S. strengths economically and military, in terms of its power. But on the other hand, you could say that this very unilateral, executive power branch, along with over-reliance on military, can breed uncertainty even for the major allies. Right? We have heard from U.S. moving Navy shippings from Asia to the Middle East and its pressures on the NATO allies as well. And I think over the medium and long term, it still means that once this dust settles, you still look at a gentle diversification trend for the dollar to continue.
And maybe just to look at the short term, and maybe even look backward a little bit, does it seem to you that was this mostly short covering in the dollar? And does it look stretched right now, looking at positioning and absolute levels? Because I want to get a sense short term whether it could squeeze higher even further.
I mean, short term, the market is in a bit of a war fatigue, right? You have been trading escalation for a while, and now that oil price kind of stabilized at a high level, but positioning was already turning long dollar. Is it very stretched? I don't think so. But you look at things like skews on the dollar, which is at several years highs. Yes, the market is building longs. The question from here is, are we moving from a price shock to an output shock? Because so far the market is still responding to this as an energy price shock mainly. But, with every passing day, the concern on the output shock getting, stronger. And in Asia in particular, I think the risk that I'm worrying is, the like of power rationing or, severe shortage of physical market or byproducts market like, naphtha, fertilizer, etc. Helium, exactly. And once the market moves to that stage, the central bank reaction function may be more different.
Yeah, and what is going to be that reaction function? Do you think that right now it does diminish the prospects for more Fed easing? And what does it mean for other central banks? We already had the RBA step forward here and hike yesterday.
Yeah. I think it's an incredibly difficult environment for central banks, right? But I think the starting point matters, and matters very much, because if you look at 2022, I call this 2022 light, but not 2022 redux. And the reason I said that is because, at the start of 2022, we had ultra loose monetary policy, fiscal tailwinds, huge fiscal tailwinds, and severe supply disruptions in both goods and labor market. But, if you look back and you say central bank was clearly behind the curve back then and had to hike aggressively to bring in inflation. If we look at the world today, I think G10 rates are largely at or above neutrals. So that the behind the curve risk is a lot less now, barring the BOJ, I would say. But, in that state of the world, I think central banks can afford to adopt a more wait-and-see approach. And so for me, the Fed would still have a small probability that they can, hold or cut this year, but I think the bar for rate hike is still relatively high.
Yeah, I mean, imagine if the Fed heeded the call from the White House last year to cut interest rates. They'd probably need to hike if you think about it. What about Europe? Europe seems to be where people are looking to be the most immediate pain because exposure to gas prices.
Yeah.
It was about fiscal spending last year. That narrative has somewhat disappeared. What do you think about the ECB?
I think definitely the ECB need to retire it in a good place narrative, right? And it's no longer in a good place, and we will see that from the guidance from the ECB, tomorrow.
Yeah.
relative to the Fed, the ECB may skew a bit more hawkish because, this ECB has a single price stability mandate, whereas the Fed, have, risk on both sides of its dual mandate. But, for this particular meeting, I don't think Lagarde goes as far as giving us, much in terms of, forward hike guidance. And at 2% is a neutral rate for the ECB. And as I said, the starting point matter. They can adopt a wait-and-see, mode for now. One thing I would say is a scenario analysis on, the ECB, because they do have a scenario analysis that comes along with the forecast change, and that scenario is worth, paying close attention to.
Will we see more pain when it comes to EMFX, particularly when it comes to Asia? I mean, you talked about the amount of energy rationing that we have to do in this part of the world here right now. Will EMFX still be quite painful?
I think so. I think we still need to be quite cautious because at the moment there is very little in terms of the left tail growth risk that's being priced in the market. So even in places where we like Aussie dollar or Korean won, where we think there are some cyclical supportive stories going on here, we don't think the current level is risk-reward wise good to engage. And I would look for a bit more risk premium on the growth side to be priced in first before looking into those positions.
We've seen some central banks, particularly among the energy importers, they've really had to come in and be active in the markets to intervene. Should we expect to see more of that short term?
Yes, I think so. Intervention, we'll see more. And there's an interesting, things that we draw between interventions and the gold demand as well, because, many of our clients is asking why gold is not performing well as, a safe haven in this episode. And one factor I would point to is that at the moment, central banks are selling dollar. So they don't have immediate dollar now for the gold diversification. It still will be the case over the medium term, and we still expect gold to recover to 5,500, which is our 12 months level. Okay. But as of right now, there's some softness there when it comes to central bank.
All right, Trang Lei, we'll have more with her. Trang Lei there, FX array specialist at LGT. She's staying with us. Still ahead, a closer look at how Chinese AI stocks are decoupling from the U.S. as a safe haven bid as Tencent gets set to report with its AI strategy firmly in focus. We got BI coming up to tell us more about those two things. This is The China Show.
So I think NATO's making a very foolish mistake. And I've long said that, I wonder whether or not NATO would ever be there for us. So this was a great test because we don't need them, but they should have been there. The other thing is, and I think, very important, we didn't have to be there for Ukraine.
We are not a party to the conflict, so France will never participate in operations to free or reopen the Strait of Hormuz in the current context. However, once the situation gets calmer, and intentionally, this term is broad enough, meaning once the core of the bombing has ceased, then we are ready with other nations to take on other responsibilities, such as an escort system.
We obviously have to take everything that the President of the United States says seriously. Those countries that have the capacity and the will to help the United States will do that and should do that.
That was President Trump and some NATO allies, global leaders, of course. They're just showing little sign that they're actually planning or prepared to participate and join in this conflict against Iran. And President Trump, of course, is, as you probably just heard, they're also slamming those allies. Have a look at this post, of course, for rejecting his appeals for assistance in the conflict, while at the same time saying that, yeah, we asked for your help, but we actually didn't need the help of anybody here. Japan, though, as you see in that post, is among the countries the president actually singled out.
Yeah, just ahead of this summit on Thursday with Prime Minister Sanai Takaichi, who says she will use the meeting to, quote, deepen discussions on the war. Let's bring in our East Asia government editor, John Herskovits, joins us now live from Tokyo. John, what's at stake for Takaichi?
This is it's a really important visit for her, and also it's going to be closely watched by the allies and partners of the U.S. to see how hard she's going to be pressed for Japan to provide naval assistance in the Strait of Hormuz. As we just saw, that Trump is on again, off again. He's off again in asking for help, but he's done this quite angrily. So Japan has said that it's not going to be sending anything. It has limits in its constitution about deploying assets to an area where there is conflict, and also the public is strongly against the U.S. war against Iran in Japan. So how Takaichi manages this is going to be quite interesting. Will Trump and her discuss this behind closed doors about how Japan might participate, or could she be in for an Oval Office tongue lashing, which has happened with other leaders? So, for her, it's a really difficult situation. She's the first leader of a country that's been called out for naval support. She's going to Washington. She's trying to maintain this military, strategic, and economic alliance that's been going on for decades. And how Trump handles this, how much he presses her, is going to have ramifications around the world, especially with NATO countries and allies of the U.S.
John, just two big developments. I want to get your thoughts on whether and how, if any, this might affect the direction of the war. One is Iran's security chief was killed, number one. Number two, Trump's top counterterrorism official has resigned. Just with those two in mind, where does this now take us in as far as Iran is concerned?
Sure. With the killing of Iran's security chief, Larijani, we're seeing that Iran is going to have a vacuum of leadership in terms of how it fights the war and how it runs the government. So this is coming as the war is intensifying. Iran's trying to figure out strategy, and Larijani was a person seen as the face of the current government. But he was also viewed as being a bit more pragmatic than some of other Iran's leaders. So if there was hope for a negotiated settlement, it could become a bit more difficult with him removed from the scene. Now, with the Joe Kent, the national security, the security advisor who left because of the war in Iran, it's showing that there are divisions within Trump's MAGA base between the hawks and those who are opposed to the intervention. This is the highest official that has stepped down because of the war in Iran, and there are rumblings within the base about whether this is right or not. Now, the MAGA base has proved quite resilient to this, but it highlights that there are divisions in this, and that the pro-Iran war camp and those opposed to the intervention are fighting it out, that there is a dissatisfaction among Trump supporters for what's going on.
John, thank you so much for the latest in the context. John Herskovitz, our East Asia government editor there. We're back with Trang, FX and rates specialist at LGT, here with us on set. I think you mentioned in the previous segment, central banks are in a difficult position. They need to manage long-term expectations and they need to manage short-term fluctuations. We talked during the break. You said Swissy and SNB is critical to watch. Why is that?
Yeah, so I think amongst the central banks, this week, right, the two that I think would be most important for the FX market is the BOJ and the SNB. Why the SNB? Because if you look at the Swissy performance since March, in fact, it has been somewhat disappointing. It's not performing as a safe haven that you would usually expect. And a large part of that was because of increased SNB intervention risk when they came out with that unusual intra-meeting statement. But I think the market would definitely test the SNB, and my concern is that a one-off intervention may not be enough, and absence kind of a signal that they are moving to a more sustained FX purchase regime, somewhat similar to 2015, 2020, the market will feel that one-off intervention probably not enough in a world of rising risk.
Yeah, I mean, the yen's probably the same thing, right? They're not behaving like the typical safe haven. We're approaching 160 once again.
Yeah, which has been for a while.
Yeah. What do you think the BOJ could telegraph this time around, this week, when it came to the currency? And is there really still that intervention risk?
Yeah, I think from the BOJ perspective, they need to really up their hawkish stance and signal an earlier rate hike. To me, I think since March, what we have seen is, the market sharply increased pricing for central banks. Like we see rate hikes being priced for ECB, for the BOE, but the market has not moved as much for the BOJ. And that's somewhat, to me, perplexing and maybe a degree of complacency because, you have the yen that is weakening, you have inflation that's already high to start with for Japan. So the starting point, for central banks is different for the BOJ. They are already somewhat behind the curve. And if they continue to do so, then that means there will be more upward pressure on dollar yen. I think 161.8, which is the high in 2024, potentially could be tested in that scenario.
So ideally, what would you like to hear? So what normalizes their slightly behind the curve position?
Well, I think they would need to signal a hike as soon as April, but I don't think they're ready to do that, which is why the short-term risk is for dollar yen upside still.
Okay, and it's undervalued still, the currency at the moment. Massively undervalued?
Yes, but interest rate differential is wide. If the BOJ is behind the curve, that's not great for the currency. And it's also not great for the repatriation trade either, because people are not ready to get back. Domestic investor will not be ready to get back into, JGBs, for instance, if you fear that central bank is behind the curve and will need to hike aggressively subsequently.
Okay, I think we covered everything, but I want to get to some of your trades.
Yes.
If there is going to be a prolonged Strait of Hormuz closure, you're saying go long U.S. Thai baht.
Yes.
Walk us through that. You mentioned about Aussie and Korean won, that is what you like. De-escalation when it also is a renminbi. Can you talk us through Thai baht and renminbi before you go as well? Yeah.
Sure. So on the baht, I think right now we have a perfect storm. And in a way, that is a storm that is encouraged by policy, at least from an FX perspective. Baht starting from a very overvaluation position, very detached from weak fundamentals. It has a highest net energy trade deficit in Asia at about 7% of GDP. And you always have this second round effect as well when you see jet fuel, freight cost, negative for the tourism industry. And seasonally, flow is negative too. The current account is, negative in terms of second quarter because of dividend outflow. And previously, you have, CTA funds that were long bought and now may have to see the signal flip into shorts. All of that tie into, the Thai authority that has been struggling for years to weaken the baht, and we'll see this as an opportunity. Whereas if you look on the RMB, right, the signal we're seeing from the authority is, completely different. I think the fact that the dollar CNY fix has been net lower since March is a huge message, right? When DXY is broad-based, stronger energy shock. I think China dominant positions in renewable energies will give it a kind of a competitive edge even after this crisis. And even though you get this delay in Trump's meeting, I think it's only slow the dollar RMB downside, but not changing the trend.
Actually, I have one quick question, if you don't mind. We've seen a move to price inflation, some inflation in China this week, steeper the curve. Yeah. Should we fade that move, or do you believe that move?
I think there's still a bit more upside for that move, given that positioning was starting from, very, very undermined in terms of China inflation expectations. Sure. And, you think the macro pictures, there's already some green shoots otherwise.
Trang Lang, it's great to have you, FX and rate specialist at LGT, joining us here in our studio. And there's more, of course, on the Iran war and its geopolitical and market fallout coming out. We're going to talk to a lot of guests here who's going to be joining Haz on today's edition of Insight. Much more ahead on the China Show. This is Bloomberg. All right, some earnings to tell you about this morning. Prudential's new business profit rose 13% to $2.78 billion on its actual exchange rate basis last year. That's thanks to growth in the Hong Kong and China markets. Now, that was above the $2.76 billion average analyst estimate. In a statement, the insurer says it will buy back an additional $1.2 billion in its own stock. Tencent Music shares have tumbled more than 20% here after a bigger than expected drop in monthly active users. That number fell by 23 million in the fourth quarter from the prior period. Results also showed slower growth in subscription revenues despite stronger performance in other sales. ZTO Express shares gained after its parcel volume outlook for the year beat the average analyst estimate. Fourth quarter revenue jumped 12% on year, also topping estimates. The company also authorized a repurchase of up to $1.5 billion in shares through March of 2028.
All right, an update on Samsung, 5% to the upside here. Well, a couple of things, memory's back, and they're getting into the humanoid robot game here. We'll be introducing such to various, I would imagine, production or product lines. So we'll keep an eye on that story, of course, as we go into the thick of things. We're headed into the Tokyo close. More on that, plus an update on Mitsui OSK on the other side of this break.
11:29 a.m. in Tokyo. Japanese markets are heading to that lunch break in just a moment, and you are seeing a decent rally underway in Tokyo today. Nikkei 225 and the topics are both up about 2% here. So certainly there is a sign that equity investors are kind of moving away from the whole Iran situation, despite the fact that oil prices are still above $100 here. We're flat when it comes to the currency, just under that 159 level, and GGB yields are, at least this rout that we've seen of late has cooled down just a bit.
One stock we're tracking there is Mitsui OSK, following earlier reports from Reuters, which now, of course, I believe Elliott has now said that they have taken a significant stake in the company. Should be towards session highs as we head into the break there on the Japanese shipper. Right, that takes us into the broader rally in the region here, 1.5% on the benchmark. We're also better on U.S. futures, E-mini futures right now, just a touch under 6.8. Every sector is up, as you can see, and I think more importantly is bottom row for second from the right. Bloomberg Asia Dollar Index is catching a bit of a bid today, which effectively is weaker dollar for a third day. That's helping things along quite nicely. Tencent on your screens. We're about an hour into the cash market session. It's out with earnings later today.
We're seeing stock down by about 0.75%. This is the most favored stock in Asia. I think it was like 64 buys. And really, of late, its outperformance with Alibaba has been quite interesting as well. This catch-up story we've seen around the stock when it comes to AI and agentic AI. Let's get the Bloomberg Intelligence take here. They think that Tencent should deliver earnings growth thanks to its low-risk AI strategy. Let's bring in our senior analyst, Robert Lee. He's with us here right now, along with our strategist, Shirley Wong, who has been talking about this whole AI sector in China and how it's decoupling from U.S. tech. Robert, I'll start with you. Just walk us through the earnings first. What should we expect for the fourth quarter?
Okay, famous last words, but it should be in line to marginally ahead because it's a well-diversified business, as you know, is a leader, even a global leader in many of its main businesses. They're defensive in nature and high margin in nature. So the numbers themselves, I don't expect any major surprises there. And in terms of the narrative, unsurprisingly, it's going to be dominated by AI and agentic AI. We can even play a game of bingo and try and second guess how many times agentic AI and OpenClaw is going to be mentioned in the call. I imagine that that's going to dominate things. But looking forward, this is a key period, Q1, which we're almost at the end of, for the games business. Again, they'll update on how the domestic video games business, which is the core of their profit driver and cash engine that underpins everything else. So we'll get an update on that, get some visibility on the pipeline of titles. But again, I think everything is going to be dominated by AI discussions.
What do you think they'll say on the CapEx question?
Okay, so I did publish a few days ago the view that Tencent and Alibaba are more likely, for obvious reasons, to increase their CapEx guidance for this year. I think, as we've discussed before, Tencent takes a very conservative view. I don't think we're going to see any doubling of capex as we saw from the likes of, the Mag 7 and Amazon, etc. But given the strength of demand for AI and particularly agentic AI services, which consume a lot of tokens, then the risk is the capex number goes up. I think more so for Alibaba, which will report tomorrow. Because they have a much greater focus on cloud computing. They are the dominant cloud computing company in China.
The latest news around Nvidia, right? So they're ramping up production of H200 to China. Reuters just came out this morning saying that China has also approved the sale of that. I mean, how do you think some of these big internet giants in China are going to respond to that?
Okay, I mean, this is all tied up with geopolitics, and it's been, again, this expression I've used before, the hokey cokey. We've been one step in, one step out. Who knows what will happen next week? But if these stories are to be believed, demand is outstripping supply at the moment. So absolutely, if Chinese firms can get their hands on H200 chips, even though the performance is below Nvidia's leading products, then of course they would take them. Whether that is a long-term window of opportunity for Nvidia or short-term remains to be seen. I think the direction of travel is still clear, given the government strategy to become self-sufficient in technology, and also with the very large number of new startup AI-focused chip companies you've seen come to market here in Hong Kong, then I think the direction of travel is to buy local. So ultimately, China wants to be self-sufficient in all core technology, with AI supply chain being a key area of investment. Just one quick point as well. Put yourself in a position of a CIO or CFO of a Chinese AI company. Now, maybe you're planning a new data center. Right, let's do it on Nvidia chips. The product's great. That isn't in question. But what you don't know is what President Trump may or may not do in a month's time. Because, again, this whole flip-flopping of policy, and from a business risk point of view, from a supply chain management point of view, you're taking on quite some risk to base your infrastructure around an American chip, which may not be available in another 3 or 4 weeks. We live in interesting times.
Oh, well, to say the least. To say the least. In fact, it's really also all the uncertainty and the fluidity of the situation has really made one specific group of stocks, AI software names. They have decoupled from U.S. peers, in some way shelter from the storm, somewhat of an anchor really here. To talk us through why we're seeing this relative outperformance in the Chinese AI software space relative to others. Shirley, of course, has been standing by for us. Talk to us about your note today, Shirley. Why are we seeing this?
Right. So thank you for having me. And yes, so this year we have seen a sell-off in global software, AI software companies' shares. Earlier this year there was concerns about the earnings and the profitability. So that's led to some of these like global AI stocks really coming down about 22% or so this year. But what we are seeing right now is that there is a breakdown in the correlation between the Chinese AI software companies' shares and also the U.S. software stock shares. So that breakdown has declined. It was at about a 0.47 earlier in September, and it fell to about almost negative right now. So and also the beta of these software companies in China are also lower compared to the S&P 500. So we're seeing that divergence between the price performance of these companies domestically in China, and also the divergence in their revenue momentum as well.
Yeah, and can you tell us the difference? I mean, we actually have seen, as you mentioned, some of these AI software stocks have actually risen since this Iran war began. And I guess this whole open claw sort of phenomenon really unfolded before our eyes. Can you tell us, do you think how transformative do you think this whole open AI frenzy is for the tech sector?
Yeah. So the open AI frenzy has sort of lifted the sentiment of these the price momentum of these Chinese AI software companies shares. But it's really the divergence in terms of the revenue momentum compared to what the valuations that we're seeing right now. So the valuations of these Chinese AI software companies have fallen significantly by 17% or so compared to what you're seeing in the U.S. Where their valuations are still slightly higher. So there is that that divergence there that is quite interesting to look at.
Okay, final thoughts. Rob, you just heard there from Shirley. You've been itching to respond.
Yeah, I don't disagree with any of that. All I would point out is that demand is outstripping supply. There's scarcity value for these pure play AI names. They are small companies on the whole. There is a big question mark as to whether they have sustainable business models. But as Shirley pointed out, in retail-dominated markets in Asia, small-cap companies, when there's a risk-on attitude towards the AI sector, small-cap companies will perform. Will they perform well in the long run? If they deliver the money, if they deliver the profits, of course they will. But I think there is a significant risk that that may not come through.
All right, Rob, thank you, Robert Lee there. Also, our thanks to Shirley Wong, both from Bloomberg Intelligence, talking about AI and all the themes around it in China. Coming up, we're talking about a Singapore-based data center operator seeking what could be the biggest loan ever for the sector in Asia. More next on the mountain of debt bankrolling the AI expansion. This is Bloomberg. Now to a Bloomberg scoop that just crossed your terminal a few minutes ago. That Singapore-based DayOne data centers is seeking to double the size of an existing loan to $7 billion. And that would be the largest borrowing for the sector by any firm in Asia.
Yeah, for more details, let's bring in our Bloomberg credit reporter, Carrie Sue Lindbergh, is with us, of course, with the details of this. It's quite a big amount. Talk us through the contours of the deal here.
To be honest, I think in some ways the deal is very straightforward, right? Basically, they need more money for, their facilities in Malaysia, which is where this massive buildup in Asia has been happening, right? Specifically, the southern state of Johor. But I think really what is interesting about the deal is really what it symbolizes, and what it symbolizes is a pipeline of data center operators that are going to need so much more money to continue to kind of supply power to the AI boom that is, really rapidly growing. But this is really where I think the question marks and the risks are really kind of starting to form already, right? Because banks have already lent tremendous amounts of money to this operator. And can they continue to keep lending in the same volume that they have been? And I think this is a question that applies to all the data center operators and all the hyperscalers that are seeking financing if Asia's AI boom is going to exist. And I think, why does this matter? Because because actually, if you look at the numbers in terms of market share, Asia's AI boom is supposed to be 32% year on year for the next couple of years versus the US's, which is only 18%. And so if they can't match that, that could spell really big problems.
Okay. I mean, this just goes to show really that, when it comes to these debt deals, it's still AI that dominates what's happening in the region.
Hands down. And I think it's also a really tricky problem, right? Because on the one hand, the reason why these deals are such good deals to do is actually very structural, because it came at a time when these deals started happening around like 2020, 2022, when the real estate sector in Asia was essentially falling apart, right? Yeah. So these banks needed something else to do. And what's a better bet than this, right? And so is this really going to pay off, right? That's the ultimate question always.
Yeah. Is there a better bet than this? I think is also a question that depends on the last point. Fantastic. Thank you, Makari there, Sue Lindbergh, our credit reporter. Right. Speaking of, right, this has intersected with the credit conversation and the sell-off in credit markets, sparked by the higher oil prices, Iran war, this melt-up in yields. As you can see, credit spreads are at their widest since June of last year, following this broader rout in risk assets. Finbar Flynn, our Asia credit editor, is with us right now to talk us through this relationship, Finbar, between private credit, the major banks step back that made then private credit have some room to grow. What is this linkage now? What's going on there?
Good morning. Yes, private credit and the public credit markets are obviously very much linked together. And for example, we're seeing that widening in the spreads that you mentioned there, David, and that's for two reasons. One is because we have the Iran war going on and spreads were so tight and people are now actually demanding for more compensation for this credit risk. But it's also because of all this money pouring into the public markets by people like Amazon, who sold 54 billion of debt last week. So that's pushing spreads out as well. And then you have those concerns about private credit. What's happening there? People want to have a little bit more compensation, but they also, you can sell the public credit a lot quicker than you can the private credit. So you may have some of that kind of sell-off there as well.
Yeah, and I mean, how much dip buying is there going on maybe? And why do you think people should be worried?
Yeah, so I mean, the question then also, so you have this dip buying spreads have gone in IG from basically the 70s to the 90s. Now that doesn't sound like a huge amount, but for credit, it's quite an increment. We're not at anywhere near the sort of the 10-year averages, which is about 120 globally, but everything is tied into credit in one way or another. We have that issue at the start, you mentioned, on the banks. Some of these major banks are saying, you know, we're not hugely exposed to private credit. Private credit has made a bunch of money for us. We haven't lost any money. But these linkages, they are $1 trillion linkages. So if 10% of private credit goes under, as PIMCO recently speculated, you're talking $100 billion. And that is a sizable amount. And if that comes at a time when the economy is not as stellar as it is in the last couple of years, then you're going to see some real pain, to be honest.
Yeah, Finbar, lots of very big numbers are being tossed around. And I wonder whether there is a risk that by virtue of the big numbers, we're effectively scaring ourselves. Just contextualize how big the risks are, essentially.
Yes, I mean, that is a common question. I mean, so private credit is about a $2 trillion market. So if you get about a 10% loss there, you got 100 billion, maybe 100 billion more. But the much larger, wider market, including public markets, is tens of trillions. So that's the context. But this actual linkage within the banks and the actual private credit managers themselves, that's an important linkage. So if things go into a recession, then all of this becomes much more, forceful and more pressureful on the managers and the banks, to be honest.
Finbar, thank you. Finbar Flynn, their Asia credit editor, joining us out of Tokyo. Here's a look at how Asian markets are doing as we go into a break here right now. The rest of Asia is actually still sitting pretty. It's the China markets that actually has seen a bit of a reversal here. We're flat when it comes to the Hang Seng here right now, and the Shanghai Composite is lower by about 1/3%, and tech selling off just a bit there. This is Bloomberg. In some corporate news this morning, Australia's biggest gas producer, Woodside Energy, has appointed Liz Westcott as CEO and Managing Director. She's been acting CEO since December and replaces Meg O'Neill, who has taken the top job at BP. Westcott takes charge as the company stands to benefit from soaring gas prices triggered by the Iran war. And BHP has appointed Brandon Craig as its new CEO to seek growth in copper and potash while managing a slowdown in iron ore. Craig replaces Mike Henry and will take on the role from July 1st. This comes as the company faces plateauing Chinese demand for iron ore, which makes up almost half of its earnings. Lululemon has forecast a second straight year of profit declines, further pressuring a brand that's dealing with product mishaps while searching for a new CEO. The midpoint of its sales forecast also missed the average analyst estimate. The performance gives founder Chip Wilson ammunition as he calls for strategic changes and an overhaul of the company's board.
Okay. Reuters says Chinese officials have granted approval for multiple Chinese companies here to purchase H200 AI chips from Nvidia. Now, the report comes as the tech giant actually said it was firing up production of those chips to sell to the Chinese market.
And CEO Jen-Hsun says the company has secured licenses for many customers and is restarting manufacturing for a market once blocked by U.S. export restrictions. Bloomberg Tech co-anchor Ed Ludlow reports on the chipmakers' annual conference in San Jose.
The situation for Nvidia has changed in China literally in the last 3 weeks. It seems like now there are multiple licenses for customers in China, and Nvidia is taking steps to meet that demand. Here's what Jen-Hsun had to say.
We've been licensed for many customers in China for H200. We have received purchase orders from many customers, and we're in the process of restarting our manufacturing.
The biggest piece of clarity came around that $1 trillion figure, a sales opportunity 2025 to 2027. It is just Blackwell and Rubin-based systems. It does not take into account any revenues or revenue opportunities from CPU or even Grok, although Jen-Hsun did say that if you factored Grok into it, there could be up to 25% upside on that $1 trillion figure. Beyond that, it was very much a kind of state of the world. It always is at GTC, where Jen-Hsun holds court with the press and goes through a wide range of issues, but probably the biggest thing beyond sort of talking about how robust demand is the solidity of supply chains. There's going to need to be trillions of dollars worth of capacity put in place to meet the supply that's required for current demand. Jen-Hsun also addressed what's happening both in the Middle East and in Iran. Nvidia has lots of employees in Israel, and he said that the company is committed to Israel. He's very worried about his employees there. And as it relates to Taiwan and the future of Taiwan, Nvidia is 100% committed, and its supply chain has heavy concentration there. That is not going to change. Ed Ludlow for Bloomberg News in San Jose, California.
Yeah, a lot of headlines came through in that conference from Nvidia, and particularly when it came to that CNBC interview with Jen-Hsun Huang and asking him about OpenClaw and what he thought, the potential of this sort of technology is. And he basically said it's definitely the next ChatGPT. That's why you are seeing some of these sort of OpenClaw linked sort of names in China in particular here that are, surging once again, Dave.
Just looking through some of the commentary that's come through there. I mean, clearly the markets are running, and why not, right? Given how bullish those comments actually sounded coming through. Vital Knowledge says Nvidia was as bullish as ever about the demand backdrop for that, extremely bullish on the implications of OpenClaw, comparing it to your point there, right? Also comparing it to Windows or Mac as it pertains to AI. Yep, in case you missed that, Jen-Hsun Huang says OpenClaw is definitely the next ChatGPT in that interview, of course, with CNBC.
Yep. So it certainly is quite interesting, right? And you're seeing that. I think China is the one that really has been embracing OpenClaw, probably more bigger than most places in the world right now. And that's why you are seeing maybe these massive moves in Zhipu and Minimax there. uCloud Tech also onshore. Let's move on and take a look at some of the movers out there. We're watching oil stocks in particular, just given the fact I think it's a fourth straight day we've seen oil prices above $100. We're slightly off some of the initial highs of the session, but still, there is still a bit of a mixed picture across some of these Asia oil plays here. Inpex, for example, though, is still up some 4%. We're watching aluminum as well. I mean, given the Iran situation, aluminum has certainly been quite volatile as well, but we're starting to see some of these aluminum stocks in China fall as we start to see inventory rising on weak demand. So they are mostly lower here this morning. Tencent and Tencent Music, the big one to watch.
Yes, Tencent Music is reaction really to what the company had said. And of course, Tencent is the one that comes out with earnings later today. A couple of downgrades still coming through on Tencent Music specifically, 22%. And we will, of course, further the conversation on Tencent tomorrow on the shows with Barclays, of course, with Zhong Xiao. He covers, of course, the Chinese tech space. He's joining us tomorrow. Fantastic insights there usually when we get here from Zhong Xiao. And yes, Tencent is out with earnings later today and, of course, into the session tomorrow.
Yeah, Tencent and the Fed and plus some pretty important central bank decisions coming up in the next 36 hours or so, right? So we talked about Bank of Canada is the next one to watch there. Thursday is the Fed. Then you got BOJ on Thursday as well as the ECB. That's it for us here on the China Show. Insight with Haslina Ahmed is next.